Hello everyone, I'm Leslie Cornwell, Certified Nurse Midwife with Empowering Midwifery Education. This section has to do with accounting tips for small business owners. A legal disclaimer we put at the beginning of all of our presentations. This information is for general and educational use only, not intended to substitute for professional, legal, or clinical advice. We strive to keep our information as accurate and timely as possible, but make no promises, guarantees that it is for your unique situation, business structure, local regulations. So please seek expert advice. Course objectives, the student will be able to verbalize why it's important to understand accounting and bookkeeping for their business. The student will be able to verbalize what exactly is accounting and what's the difference between that and bookkeeping. They'll be able to verbalize the different types of accounting structures, the things that are really key and important to keep track of with business accounting, particularly as a small business. They'll be able to talk about the different accounting cycles and the structures of how they can review their records and make adjustments with their budgets and projections based on that information. They'll be able to talk about the key accounting principles involved with running a successful small business. So let's go to the basics. What exactly is business accounting? Business accounting is a systematic record keeping. It's a way to interpret, analyze, and present financial data, depending on what the purpose of it is. So you can use QuickBooks, you can use Excel spreadsheets. There's a lot of great programs out there. If you're using it to create budgets and seeing if you're keeping on track, you have investors that have participated in the financial risk of the business. They're going to want to review the finances. With your accountant to be strategic planning, you're going to want to see, are you meeting all your deductions? Should you be prioritizing purchasing something in December or waiting till January with the new calendar year? So there's a lot of things that benefit from having that written record to know, are you profitable? Where's the money going? Where are you making the most? Where are you losing money? They're really important things to have, especially with a small business. Whether you're one person, a small team, it's the same core concepts. It's just scaled up in the complexity. So you want to show with accounting what money is coming in and what money is coming out. What expenses, categorize them appropriately. Is it for marketing? Is it for supplies? Is it for equipment? Is it for training? Is it for continuing education, travel expenses? What exactly? Because you want to see the trends and you want to make sure if something's getting too expensive, is there a better option, or are you making a bunch of money one direction over the other? Maybe you need to expand in that service line a bit more. So it's a really good way for you to show the strength of your practice. If you're thinking of selling your practice, you're thinking of getting partners and you want to value the business, you're going to look at your tax returns from the last 3 years and they're going to look at Schedule C's. They're going to see your income and expenses for the business to know the financial strength. Is it profitable? Is it self-sustaining? Is it in the early stages of startup? Operation expenses are still high. Those are really important things that business accounting will represent for your practice. I hear it too many times with midwives, birth workers, small business owners. They don't really keep track very well. They'll do it at the very end of the year when they've got to submit their taxes. They sometimes will get a bookkeeper, sometimes they'll use an accountant or use TurboTax, but they really don't know the financial strength and the health of their actual business. They just take care of people and see the bills are paid, and they give themselves a salary, the leftover. And so I challenge people to really look at it a different way. Like, I want you to have an accurate fee schedule. I want you to have budgets, and I want you to have good projections of what you're going to have coming in and out. Your accounting records, your bookkeeping records are going to show, are you on track? Are you below par? Are you above par? Are you following the trends of where you want your business to go? So there's different types of accounting. The one we're more familiar with is financial accounting, and that's more with, you want to know your income, your expenses, where are the profits going, where are the losses going, shows the financial health very transparently of the practice, very high level, how much for salaries, how much for training, how much for equipment, marketing, building, loans, expansion projects, services, insurance processing, all those things, it's showing in your accounting income and expenses. The invoices, how many are actually getting paid, how many are outstanding, how many are in collections. The managerial accounting more has to do with whoever on your team is keeping track of that for you. You could outsource a bookkeeper, you could have your office manager. I don't encourage a lot of on-site staff to be very transparent and honest with their financial integrity of the practice. I tend to have somebody outsourced. It's going to help if you ever get audited for tax purposes because you have an objective, outsourced, credible person doing your bookkeeping versus you're doing it internal where you have biases. So there are some benefits, not just with a different perspective and angle to look at things, but they're also an expert in that. They're going to know how to categorize things. They're going to know how to help you with the deductions and the ways to put things to be proactive so you pay the least amount of taxes. So it's multiple purposes for the managerial accounting. It's someone helping to make sure that you're following your budget's projections, you're getting the most tax deductions possible, and you're on track to where you want to. So tax accounting is typically, if you hire an accountant, it's more filing taxes, it's putting your income expenses, that Schedule C data in. I love when accountants will do more strategic planning with small businesses, but honestly, most of them just submit the numbers and file your taxes for you, and they'll help defend you when you get audited. So you really have to have a good discussion with your tax accountant, because that is different than a planner, a business strategist, a bookkeeper. A forensics accounting isn't so much with small businesses, but on the other end, if you want to get a bank loan, you are getting audited. The forensics accounting is they're doing research on an outsource to examine the integrity. Are you embezzling money? Are you sneaking cash under the table? They're looking and they're auditing your accounting to make sure that it's accurate, it's following all the local rules and regulations, and you're accounting for the correct deductions that you are allowed to have. Cost accounting is the basic version. It's literally looking at how much does it cost to run your business. What is your overhead, gross income, net income, high level looking. Are you making money each month or are you losing money each month? So cost accounting is more not detailed scrutiny of all the numbers, but just really looking what are fixed costs, what are variable costs when you're doing your business, financial projections for the next year. What can you control? What can you negotiate? What do you not have control over? And that's really important with inflation and buying supplies in bulk and staff salaries going up, extra regulations in place. There's some things you just can't control that you have to do with hiring staff, documentation, follow through, quality measures. You have to determine what are fixed costs. Your lease and your loan are going to be the same the next 5 years until you pay the loan off, till you buy your building. Variable costs would be your labor and adding staff, removing staff, overhead profit margins. There's variable profits, how many services you offer, how many clients you see, who risk out. So those are things to think about with cost accounting as the high level income and expenses of what's actually. So for a small business, there's really important basic practices. You want to get in the habit, no matter how big or small you are, from day one to use an Excel spreadsheet, to take scan and put your receipts on an app. You want to have good record keeping because you can get audited up to 7 years after your taxes. And you want to make sure you're not tipping the government. You're not giving extra money unnecessarily for tax deductions that you just didn't have good record keeping of to give credit for. Your mileage, you want to have good tracking systems so you can submit that to your bookkeeper, your accountant, to give you credit for it. You want to have every business expense. You don't want to do it under your personal credit card. You don't want to do it under your personal account. You want to have your personal and business finances as separated as much as possible. It'll decrease the risk of vicarious liability. It'll help with audit situations. It'll make things clear that this was for the business, this wasn't for home use. You want neat, clean, accurate, because you don't want things missed. You want to be able to review them easily. You don't want to spend 3 hours sorting through a stack of shoeback paper records and receipts if you get audited, and you don't want to try to figure out your profits and losses, and it takes you a lot of time because you haven't been keeping up So that's why I really encourage people to get bookkeepers, get enrolled in QuickBooks right away, because they can sync your credit cards, your checking accounts, your savings accounts. They can really automate a lot of things that'll save you a lot of time. So you definitely want to get some training if you're going to have someone on your team do the bookkeeping, because there's certain categories, like for food example, certain things are 100% covered as a tax deduction and some things are 50%. Are you going to do mileage versus covering a vehicle with the business? You want to be able to have a good analysis with an accountant, a bookkeeper, someone to see which type of structure for keeping receipts, keeping track of things makes the most sense for your business. So you really want to know the local rules, regulations. There's federal tax regulations to be aware of. There's local state regulations. There's business things. And you want to make sure you're understanding what can you count towards your business and what has to stay as a personal expense. And then making sure your tracking system clearly communicates it, because it's a ripple effect. If you want to sell your business in the future, you want to add a business partner, how can you show the financial value and health of your practice if you do not have accurate records? So the difference between accounting and bookkeeping, and this is really important to understand, because I think when people hire a bookkeeper or hire an accountant, they sometimes get assumptions of what they can and can't do. So an accountant can do your bookkeeping and can be your accountant and file your taxes and give you tax advice. A bookkeeper is strictly inputting the data. They aren't going to interpret rules and regulations and give you strategies to work on. That it will save the cost when you work with your accountant to have a bookkeeper in throughout the whole year. Bookkeepers can range between $200 to $500 a month, depending on how complex your bookkeeping and transactions are. Bookkeepers keep track of your records. They categorize things appropriately. They organize your receipts for you. They're data input specialists. And then the accountant would be the one that takes all that data they're inputting and they would interpret it. Hopefully they don't just file your taxes for you, but they're actually proactive in the fall, in the beginning of December, giving you some ideas and structures of, you made tons of money. Instead of you paying a bunch in taxes, let's buy something. Let's do a year's worth of marketing budget and pay for it now so we can lower your taxes, versus you wait till January. Or you know what, you didn't really make that much money this year. It makes more sense for you to take the dividends, for you to take the profits and do some tax strategy and then just buy more things in January, because you know there's a bunch of funds coming in. So it's really important. Your accountant will be strategic with you. They were going to help with your taxes. They'll know the tax codes, the regulations, the deductions really, really well. The bookkeeper is going to keep track of everything for you. So you really want to understand in details what is the difference between the two, what system they use, what services they're going to offer. Especially accountants, there's a wide range of services of what they will offer for you. So make sure you're really understanding what you're paying for. So basics of accounting, you want to keep track of your records, what money comes in, what money comes out, your bills to your customers, what's been paid. You've been paid by insurance companies, you've been paid cash, you gave them a receipt, you've got a supply company that you've paid, you've got your gas for your vehicle, the oil changes, the monthly payment. You've got very specific things you need to run your business. You've got the internet, you've got supplies, you've got office equipment, you've got medical equipment, you've got training staff, hiring staff, subscriptions, continuing education, attending conferences, taking out a collaborating physician for dinner. The list goes on and on and on. So you want to keep track and give credit. Everything you do for the business needs to have a receipt, needs to be clearly organized, needs to be accounted for in whatever bookkeeping accounting system you decide to use. You want to make sure that you're keeping your personal and your business assets and income and expenses as separated as much as possible. If you decide to give the business a personal loan to start up, you need to write, you guys are a separate entity. You are the owner of the business. The business is an LLC, it's a sole proprietorship, it's an S corporation, and you are your own personal entity. You have a social security number, the business has an EIN number. So you want to borrow money from yourself and put in writing a loan and pay yourself back. So you're not getting taxed on income for money you had given to the business as a startup loan. So there's very specific things you want to keep track of very clear what money was paid to the business, what money was an income, what did you pay staff, what did you pay yourself, how did you pay yourself, did you give yourself a typical earned income Did you give yourself a dividend because you're an S corporation? They're taxed differently, they're categorized differently. How are you processing payroll? What taxes you took out for your staff? Because they're going to want to know, the government, when you do your quarterly taxes and when you do your input at the end of the year for your 1099 and your W-2 staff, you want to clearly have a record of what taxes you've paid on them, and you're understanding your federal, state, and local tax requirements, because everybody's situation is different. So you want to really have good, clear documentation so that when you do your taxes, it's going to cost you far less with the accountant. You're not going to miss anything. You're not going to get audited and fines and fees and all of this headache later down the road. So what exactly is an accounting cycle? An accounting cycle varies greatly. We typically do bookkeeping in a monthly accounting cycle so we can keep it accurate, updated, get a good sense of monthly flow and trends, and that's what we typically use for budgets and financial transparency of the health of the business. But there's also quarterly accounting cycles. Maybe you're doing financial meetings with your board of directors, your investors, with the people that are more key financial decision makers on your team. You have higher level meetings and accounting cycles with them of talking and reviewing the finances of the business. But then there is also yearly accounting cycles. You want to do your fiscal spending. You want to look high level. How did the year go? Because especially in midwifery, you have ups and downs. Maybe one month you took vacation and you didn't take that many clients, and then another month you did take a ton. So the monthly one is not so much a detail of the overall health. You want to look at the year because that's going to give you the averages. It's going to give you the whole projections, and that's what you use for your deductions and your taxes and your inputting your data. If you get audited from the federal or state government, they're going to look at a year of accounting cycle for 2020, 22. They're going to look at that level of accounting cycle. So you want to really understand there's no hard rules. Accounting cycles can be monthly, they can be quarterly, they can be biannually, they can be yearly, depending on what you're trying to look at with that information. So there's 8 main steps in effective accounting cycles. You want to identify clearly the transactions and consistently. If you're buying meals for networking and continuing education, you want to know, did you buy food, bring it on site for the team? Did you go out to the restaurant? What was the purpose of the conversation? You want to be consistent, just like your documentation for taking care of people. You want, if you get audited, you say, this is the way I always do it. You want to say, okay, I'm going to do mileage for my vehicle because it makes most sense. You can't jump back and forth and say, well, I'm going to do gas this time, but then I'm going to do mileage this time. You have to look at the whole fiscal year for when you do your taxes, and you have to choose a transaction style that's consistent. So most of the time it's pretty simple. Supplies, you pay for it with your credit card, debit card, check, and then you have a receipt. You scan the receipt, it's categorized in the supplies, it's categorized when you do payroll in the salary, the expenses for labor, the training. You want to categorize things as consistently as possible. If this is a training thing, orientation, taking people out to conferences, you want to know what you have budgeted in and make sure all of your transactions that fit that category are consistently put in that place, because it's hard to know I'm budgeting training and taking my staff out. They all have contracted $1,500 for continuing education, but if I don't do consistent transaction identification in my bookkeeping, it's very difficult to audit and look back at to make sure, did they get their max CEUs? Did they have a rollover? Did we meet our budgets? Did we go lower on our training expenses than we anticipated? If you don't have good categories, it's very difficult to know where are your weaknesses in your business and where are your strengths in your business financially. Other things to look at is you want to do kind of a list of the end of the year, reviewing everything, high level testing, like were your budgets, were your projections on track? Did your actual money that come in, did your actual expenses hit where you were looking at them for? Did it or did it not? With inflation, it's a lot harder. Maybe the supplies were a lot more expensive than you anticipated. You better make sure your fee schedule and your projections for the next year are more closely in line with what you actually spent, because I promise you, if you don't have accurate budgets and you don't keep track of your finances and your accounting really well, you as the individual will be losing your revenue, your income, because that's the budget it's going to be pulled from when you didn't accurately create fee schedules, you didn't accurately have budgets and the funds of what they actually realistically are. So that's really, really important. Keeping worksheets, depending on what the purpose of them, QuickBooks, a lot of these Excel spreadsheet data collection, maybe for continuing education for your staff, you have separate Google Docs that are keeping track of the date, how much, so you've got it trending that way. Accounting cycles, accounting documentation can be very different levels depending on the purpose of it. If it's for high levels, the health of the business, you're considering selling it, they're going to look at different things than the specifics of the expenses for your continuing education for the staff. So you want to look at your spreadsheets and what they're designed for, what their purposes are, your QuickBooks, how they're categorized, what that category description means, so that you can clearly communicate it when you're presenting the financial health and you're analyzing directly the financial health of your practice. So adjusting journal entries, this has to do with if you're writing people off, like putting little notes, adding comments, putting who do we send to collections, who do we write off after a certain point, what did we barter, what did we negotiate, so that if there are odd discrepancies, you're like, why didn't we follow up on this invoice after 3 times? You need to have good, clear communication to understand those unique situations. What did you do to follow up and resolve that finances? Maybe there was an invoice sent to you and you canceled that supply and never actually paid it. You just need to put a little note, like, so that there's not 6 months, years later, you're looking and are like, why didn't we pay that? Why did we pay double? Why is the invoice say this amount, but I have a check and a receipt saying this amount? You need to have really good notes for those unique situations of how you handled things a little bit different than your typical norm. You want to put financial statements. You want to put very high level. QuickBooks is really great at that. I have with Excel spreadsheets where we do algorithms and pull all the data from the whole year and convert it into a high level financial integrity statement. You see the net income, the gross income, the profits, the loss, and all the different categories, and you really get a good sense, okay, my service line, the birth center is this level of profit margin, the facility fee, the care, the GYN stuff, the well woman, the people on my team versus my midwifery care, we're selling products, we're doing childbirth education classes, we have doulas that we get a cut from, we have lactation consultants we get a cut from. You want to really have a good sense, so then you can determine in the future what makes the most sense based on your mission, your vision, but also your financial strength. If something is losing you money over and over and over again, does it make sense to just make a nonprofit and have a different business structure for that service line versus continuing to offer it within your company? So those are really good analysis that you want to do when you're looking at where's your practice now, where are the holes, where are the weaknesses in the financial integrity of the practice, where are the strengths, how do we expand on those strengths so that we can be sustainable, decrease the risk of burnout, and have a really healthy, profitable practice that will be there for many years to come. So accounting principles, you want to talk about what is earned, how was it earned, where are your expenses, how was it lost, what are the categories, are there consistencies, are there inconsistencies, are there certain items that are linking with, okay, clinical care links with the supply expenses, the training links with the high turnover of my staff. Like, you want to make sure that if you're seeing an outlier, like especially as you grow and expand and there's lots, maybe you give your office manager a credit card and everything's busy, you want to make sure your income and your expenses line up accurately. If you're like, why was the credit card supplies $5,000 this month, but then all the other months it was $500? Like, you want to be able to track and trend for those rare things of embezzlement and integrity of staff and quality of the people that are in charge of income and expenses. Like, okay, our revenue, it's usually 70% cash and our receptionist is amazing, but this month we only had like $500 or $200 in cash. Like, you want to dig into the invoices, you want to dig into what is actually saying. If it's saying there's a bunch of money on paper that came in based on receipts from clients, but you actually look in your bank account and it's not there, you want to have consistencies and really evaluate. I mean, in the innocent little world, we think that, that money, we collected it from a patient, it went into our bank account. But, sometimes with our staff and you grow bigger and sometimes things happen. And so you want to make sure that everything is matching in alignment based on what QuickBooks is actually saying and what your bank accounts are actually saying. You want to look at the cost principle. You want to look at the historical trends of what things are costing. Should you buy in bulk? Should you wait to buy this when inflation is better because it doesn't get bad in a long time? Maybe some of your equipment is you turn over this one item over and over again, or have to have repair on the computer all the time. It might make more sense to just get a brand new computer. There's very cost principle analysis. You're going to look to see at the trends, to see where things are getting more and more expensive as time goes on. And is there a better way to do it? Is maybe outsourcing billing was great in the beginning, but as you get more and more patients, you bring in more money, that 8%, 10, 12% commission may not make sense because it's just too expensive. Let's switch it over to someone part-time, full-time on our team that'll be a fraction of the cost versus this outsourced billing company. So you really want to use your accounting to see the trends, see your projections. If things are high and low, why? Where are the missing pieces? You want to do a good analysis to make sure that everything is accounted for. So as a high-level summary, bookkeeping and accounting are so important for any practice, particularly midwives. I see it too often. They don't know the financial strength of their practice. They have no clue where money is coming and going. They pay their bills, they sometimes keep the receipts, and as long as they get some money every month, they're happy. As long as their bills are getting paid, as long as the practice is going. But it's hard to handle what-if scenarios. It's hard to handle emergencies and trends and all this information your practice is giving you if you're not taking the time to actually analyze it and put it into categories and transparent record keeping. I see so many midwives lose lots and lots of money to the government for unnecessary taxes they're paying because they don't have good record keeping. They aren't keeping receipts that are for the business, but they're just paying for it with cash in their personal. They're not worrying about the receipts. They're not worrying about mileage and their vehicle and their home office and all these other things that the bookkeeper and the accountant would recognize and would have a conversation with them and make sure we're accounting for everything that's utilized in the business. So I really want to stress, find an amazing bookkeeper, find an amazing accountant, find someone that really will help you be proactive to strategize your business, not just accounting and putting it into the tax forms and submitting it to the IRS. You really want to look at the health of your business. Saying in 5 years I want to sell, so we've got to make sure those 3 years prior to the business selling or adding a business partner that the financial strength on our tax forms is really strong. So you want to think about things. You want to think about your service lines, the overhead expenses, income. What is the financial health of your practice? Your bookkeeping and your accounting will tell you that.